Trading Market Technicals morning call video for Tuesday, August the 13th. Another quiet session. Dow down only about 5, S&P down just under 2, and the Nasdaq actually was up 9. And that was helped by Apple. They announced their new iPhone, and we got a little bit of a bounce. I'm going to go over the chart on that. A couple of important technical areas I want to point out to you. Do have some indicators that I want to show you today that are on sell signals. We did not get a lot of follow through to the downside, which is obviously a bullish sign. However, I do still feel that we get a little bit further push lower, probably close to that 50-day moving average, and then of course we would get some sort of rally. Now remember, seasonality, we are coming into some weakness here between now and sometime in September, and that could last all of September or it could last a good part of it. There are a couple of years actually in a row that September was actually a very strong month, so you really can't go by that. You really got to understand and really pay attention to what price is doing in the markets to really get a good handle on it, because we just don't want to go by what past history is. Yeah, that is a good gauge, a good guide. But I would just, I'd like to see price really tell us that we are moving lower. I want to go right into the charts. Let's get into the indicators. Got a lot to go over. First, I'm going to show you the bullish percent S&P. And as you can see here, I've showed you this many times before. This is a pretty reliable indicator. Now, this is back on a sell signal, but you notice the chop here. I mentioned that when on sell signal, we pop back up, but we are below the 8 moving average. And what I'd like to see this to kind of further separate before I really get a little more excited. Again, the RSI is way up above here. We're starting to roll back over again. So this is on the sell signal. There's no question about it. We are going on a sell signal on the New York Stock Exchange and the Nasdaq Summation Index. I pointed that out yesterday in the morning call video. So just keep an eye on things, see where we're going. We're up about 2.5 right now in the minis in the electronic session. Really nothing to write home about. It's been very quiet in the overnight session. And again, things could really dry up the next 3 weeks here going into August, because we are in the heart of the summer where all the families and everybody takes off the last ditch effort of their vacation in order, before the school and everybody goes back to work. So you got to keep that in mind, okay? Take a look at a couple of things here. I want to show you the bullish percent financial sector. This is lagging the market, and this could easily take down the market as well as the semiconductors. I showed you the SOX the other day. I'll show you the SMH today. That actually had a good pop yesterday. But again, guys, you got to keep an eye on a lot of these internals to see what's happening here. A lot of the tick at the end of the day is still well above zero, so that's actually a good factor. The longer term picture looks really well for the S&P. But again, you can't just go straight up from June and then all of November and then run up here without any decent pullback. Now, this is not even really considered a pullback. And this is the XLF, but it's very similar to the S&P if you do a simple overlay. But here we do have a sell signal in the bullish percent financial sector, and this is something that now it could turn back up again, but we are at these levels where usually we get some sort of a sell signal here. We popped up, look at this, up at 99, at 99, excuse me. But again, keep an eye on the financials, because they are weaker than the broad market itself. All right, now I want to go into a couple of things here, and then we'll go into the crude gold charts. Now, VIX is still basing here, still relatively cheap. We're at closed at 1281. You can see positive divergence here and here and here. So that's why I'm thinking, you know what? I just don't believe that this market is ready to go up. We might get a good push. I would like to see the market at least gets anywhere close to the highs and have this VIX come in, tested, break below the Bollinger Band again, and give us a buy signal, which would be a sell signal to the market. And then look to buy volatility again and sell the market, and then reach that 50-day moving average and start looking nibble in long. That's going to be really my cue here. That's what I'm looking to do in the next few weeks. So I'm watching patiently. Remember, patience is key right now in this market, because we have volatility that's really non-existent, still non-existent, even though we did have a little bit of a pop-up, and we took advantage of that last week. But we still need to really be patient here. We don't want to be trading in a hole, and then when the markets do start to rally and get more efficient, you're scared and nervous because you lost money. You don't want that. So you want to be nimble, keep it light, and believe me, the trade setups will come. Okay, now let's go into let's take a look at gold here. Actually, let me show you crude because crude I got more on gold than anything. As I mentioned before, we're stuck here in this range, and I'm going to show you a USO chart as well for the people that don't have the crude future itself. Now this here is we're in this range here. I would love to see crude come in. I mentioned yesterday into this area 102, which is the 50-day moving average, or break above this area here, kind of nibble around this area, and then of course your stops will be below. So I'm not really, to me, and my trading plan, risk here is really a little high for me. So I don't see crude really selling off that hard, but I'd like to see a little more of a dip here into that 50-day moving average, or I'd be a better buyer back above the 108 area, 109. So that's what I'm looking for with crude. I also will show you a chart on the USO. Now, let's take a look at gold. Let's take a look at let's go start with a monthly chart of gold. Keep in mind, we are in a bear market in gold. We have just started this bear market, and bounces for the longer term traders will be sold into, at least until this 8 and 21 crosses back to the upside. And even then, you might have a double top here. Remember, 2001, we started this bull market in gold. So for the longer term picture, gold is now on a sell signal and remains starting a bear market in gold. So that's what I want to show you on the monthly chart. Let me just show you the weekly chart of gold here. This is where I still, right now, gold needs to prove itself for me to start looking to buy it. I'm a better seller of gold into this 1400, 1460 area. I'm not just if it gets there, I'm not looking just to sell it. I want to see a trigger, meaning a rollover, taking out previous day's lows. Or I might be a better buyer when it gets up here. Right now, I'm still looking for a short. Back up to these areas. If you can see here, lower highs, lower highs, lower highs, all bear flags. Bear flag, and of course, or I'd be a much better buyer down here at the 1100 area, okay? But again, right now, I'm just staying away from gold. I'm not really looking for it, but I am looking to be a better buyer. Now, if you look at the daily chart of gold, we have a few things going on here, and I wanted to show this to you with the bigger picture here. We have a downtrend line which has been breached right to the upside. So now we're starting bullish symmetry. We have our bear flag that actually turned into a bull flag, right? So if you see this, here's your flag pole. Here's your flag pole. Here's your flag. We broke back out of it, and now this has turned into a bull flag, and now we broke back out of that, and that was sitting on resistance here at 1350, right? If you can see the large supply area here with the volume profiles. Now, here's the thing. If you can look at this, and I'm going to show this to you in GLD, this looks like an inverted head and shoulders. Left shoulder, head, right shoulder. Slanted neckline coming in here. Now, if this breaks out to the upside, you're going to have a decent target well above in this area here, and I'll show that to you in GLD. Now, our ratio chart, gold versus the S&P, finally just broke out yesterday. So we're going to see if gold has enough legs to get back to that target area of where we're going to be looking to short gold. Now, again, technical analysis changes every day. So if we get back above there and we start to kind of break back out of this inverted head and shoulders, if you will, and then we actually start to sideways consolidate and then break up, I would probably be a better buyer of gold, at least for the target, and then look to sell gold again later on. So we don't know. It's a little iffy. We have a lot of stuff going on these charts, and that's why I'm just going to kind of wait and pull back a little bit. Now, speaking of that, as you know, the dollar affects gold, silver, commodities, crude oil in a big way, and equities. I like to see gold, if the dollar starts to really rally. Now, the dollar, really, the line in the sand is $82 right up in here. I'd like to see, it really needs to break 82.50 for the dollar to really get going to the upside. 80, let's call it, 81.10 here. We're in the supply area. We're in the support area. Excuse me. We're in the support area of the dollar. If the dollar can break out and break above this and consolidate a little more, you're definitely going to have a shot at least to test the highs, and then we'd have to reevaluate it. But at least this gap area here of resistance, which would come in at 83.50. So you're going to have a dollar of clear upside, and then of course a test of the highs here. 8250 is really going to be the one it's going to need to clear before it really gets going. So just remember that, write that down, keep that in mind as well. Now let's go into the charts. I want to show you USO, and why I'm a little, I would say a little taken back. I'm not looking to buy this area here is because we have a gap area of resistance, which comes in here. And in the crude oil chart I showed you, that was a double top way back a couple of years ago, a few years ago actually. So we're in this band of resistance, in this gap resistance area. So either going to need to clear it and back test it, and then at least we get a test of the highs here of 40.33, or we break back down, retest this horizontal support area where the 50-day would come up by the time that does happen, and then look to buy that support area. And then, of course, your stops would be below that. That's why I'm not really so crazy about looking to buy USO at this moment. Now, this could easily just shoot right up. We have a geopolitical event happening, Middle Eastern conflict starting to heat up again, and this thing could just take off. And that'll be fine. I'm just not going to, that's not what I'm looking to do. It's just to buy it on assumption of that. I want to see a technical pattern. I want to see a breakout. I want to see some sort of trigger. So that's why I'm staying away from USO unless it gets back above these areas or back below here. I'll be a better buyer here or above here. Now, GLD is what I showed you. Here is this inverted head and shoulders that I looked at in the GLD chart. Now, the GLD has a lot of gaps, obviously, because crude trades overnight. Gold trades overnight, and it's always trading. And then when the market opens at 9:30, obviously you get these big gaps. But look at this. If you look beyond this, we have an inverted head and shoulders here, left shoulder head, right shoulder, clearly identifiable. And we have the slanted neckline here, target 150.75. So that's why I'm saying is that now we haven't gotten above the 50-day moving average here, identified in red. So if we break back above it, is 130.18, 131, and we could trade a little sideways, which really this does not, because obviously it's always moving in the overnight session. But if we can get kind of stay in the range at least a little bit, within a couple points, I think you're going to get a good shot at least the 200-day moving average, and then of course the ultimate target. And why is, look at the volume profiles. We get above this 136 area, you're going to have a clean shot all the way up here. There's nothing above. So just keep that in mind, guys. Gold is going to be a real good trade in the coming days and weeks here. I'm just kind of watching to see where it goes. So I like gold better than crude oil right now. All right, so let's go into the charts here. S&P, we have, as you can see here, we're really consolidating. We did head lower a little bit. Now we're just kind of popping around. But 168, 170, we got a 2-point range here for pretty much most of July and all of August. So it's this uptrend line from November is still holding true. Probably going to be your next support area. And then, of course, the 50-day moving average. Again, I'd like to see a couple of weeks, 2 weeks, 3 weeks of weakness going into September, which would give the next 3 weeks of August choppy or a downward price movement, and then catch that 50-day as the 50-day comes up, and then be a better buyer there. And here's a 30-minute chart of the S&P with the Bollinger Bands. As you can see, we're getting a tight now. Bollinger Bands are starting to pinch, which tells me we should have some sort of a movement, either up or down. Now, it doesn't tell you what direction, but if you see here, we had a pinch here from a 3-day consolidation, we popped up. So get ready for some sort of movement, I think, in the next couple of days in the S&P. Here's the diamonds. Same thing, as you can see here, we broke this uptrend line. Diamonds are definitely weaker than the spiders. And now we're almost at the 50-day moving average. So something to keep an eye on. That I think that I think equities can move lower, and I am looking for lower prices. And another reason why one of our culprits is the transports really acting really weak, as well as the banks, as I showed you, and the semiconductor. So we have some evidence that and red flags that we are looking for lower prices, and I am looking for lower prices right here, at least the 50-day moving average. And then, of course, this area here at 112.20. Which would be a horizontal support area, which is really a big area of support, which was resistance at one point in time this past year. All right, take a look at IWMs. Now, the Russell actually popped up real nicely yesterday and actually gained a little momentum to the upside, and that is a good sign, right? It is one of our leaders. So a lot of mixed bags. So let the markets digest the movement. Let it kind of sort things out, and so we have good symmetry in all of our indicators in our sectors, and really giving us, okay, this is where we're headed, higher or lower. Right now, we've got a really a big mess on our hands right now. Here is the SMH, which is the SOX Semiconductor Index, which is the ETF here. And as you can see here, this head and shoulders, head, left shoulder, right shoulder is still here. And look what's happening. Still holding this slanted neckline. So this really is going to be a good test here, guys. Well, let's call it, 38. Below 38 on a closing basis would trigger this bearish pattern. Right now it has not, right? So I wouldn't be out looking to short, but I would take an objective short somewhere up in here, just as long as you don't get past this right shoulder with your stops above the head here. That would be a good risk-reward trade. Now, Goldman Sachs, as you can see here, really starting to break down, and it is almost at its 50-day moving average. Take a look at the XLF, and as you can see here, the XLF really sitting on the line in the sand here. That's his horizontal support of 2030, and of course that'll catch the 50-day moving average as well. So just keep an eye, be on your toes here. I mean, if you're looking to short something, look short weakness. That's something that I definitely want to be doing. All right, Apple analysis. Always get a lot of requests for Apple, and we've done pretty well here on our analysis from way back up in here from last September. Now, where do we go from here? Okay, well, we got the 20-day moving average on this uptrend, so holding real nice here, right? We have bull flag. Now, we broke out of a bull flag due to the new iPhone, so people got a little giddy and they started buying it, which is great. Here is the 200-day moving average at 471. I think it needs to break that, and our first upside target would be the 483. Why? And we look at this. Look in the back. 483, 485 is going to be your gap area of resistance. Now we're into that now, right? You can see here. Let me get that down here. That just moved a little bit. Okay, now let me move that around. We're into this gap area of resistance as we speak, right? But it's a big gap, so you got a lot of movement here. I think that if we can get above the 20, which is the 472, 471.66, call it 472. First target will be the 483. And then, of course, the second target would be up here in this area of, call it 500. We'll get around lot area 500. And also look at the volume profiles. We have nothing in this area up in here. So if we take out 583, we could really get to the 500, okay? So let's keep an eye on Apple. Apple doing pretty well. Now, your low, your line in the sand is this low, is Friday's low. 453. 453, call it a break and close below that, would put you below that, just below that 200 and that uptrend line. I would be getting out of Apple or tightening stops, because then this pattern will reverse and at least get it shot of testing the low of the 50-day moving average. I do still see lower prices here, but again, things do change. They come out with some products, and then everybody's bullish again in the stock. So, but if you are long from here, tighten up the stops, put your stops below 453, and then upside target would be 483, okay? And lastly is the Qs, obviously getting some help from Apple. I know this is a little bit long, but I wanted to get a couple of, I want to address some key points here in this video. Have a great day, guys, and we'll speak to you tomorrow. Take care.